Okay, let's dive right into this explainer. Today, we're going to decode a massive secret, why some businesses absolutely crush it while others just mysteriously vanish. We are unpacking the actual language of business, pulling back the curtain on the fundamental secret that separates the massive empires from the collapsed dreams. It's a secret that hides in plain sight, and it literally dictates the fate of every single enterprise out there.
It's kind of shocking to think about, right? You can pull in thousands of dollars in sales every single month, work your absolute tail off, pour your heart into what you do, and still lose it all. It's almost never a lack of effort. It's rarely a lack of passion. The people who lose it all are usually the ones working 80-hour weeks, giving everything they have to their dream.
And here's the kicker, the fatal flaw. It's usually not a lack of sales. Most businesses fail simply because they don't understand their finances. If you don't speak the language, you literally can't read the warning signs. You're essentially wandering through a minefield blindfolded. Passion gets you started, for sure, but financial literacy is the absolute only thing that keeps you alive.
So to fix that, we're tackling 5 core concepts today: the business dashboard, the income statement, surviving on cash flow, the balance sheet, and timing.
All right, Section 1, the business dashboard.
Look, accounting is the language of business. It's your informational dashboard. Think of it like this. Imagine you're barreling down a pitch-black highway at 70 miles an hour, but you absolutely refuse to look at the dashboard. You don't know your speed, you don't know your fuel level. Picture that total panic when the engine sputters because your fuel gauge hit E 20 miles ago. Running a business without accounting, it's exactly the same thing. You're just going to stall out in the middle of the road. You must use this financial dashboard to know if you're safely flying or rapidly losing altitude. It's not about being a math genius, it's about understanding what your money is desperately trying to tell you.
Moving on to number 2, the income statement. This whole thing boils down to one super straightforward question. Did you actually make money this month? It sounds ridiculously simple, I know, but it is the absolute foundation of your operation. Without a definitive answer to this question, you're operating entirely on assumptions, and assumptions are incredibly dangerous.
Let's say you own a local coffee shop. It's a busy Saturday morning, the espresso machine is humming perfectly, there's a line winding out the door. End of the month rolls around, and your register shows 10 grand in sales. Honestly, that sounds amazing. You see $10,000 hit the till, and you feel this undeniable rush. You think, wow, I finally made it.
But hold on a second, because that $10,000 isn't yours to keep. Let's look at the reality. You've got to subtract your expenses. We're talking rent, salaries, the cost of those premium coffee beans, the crazy electricity bill. After you subtract all those harsh realities, you're left with your actual profit. So maybe, in this case, it's just $2,000. The formula is dead simple. Revenue minus expenses equals profit.
So, the big takeaway here? Revenue is just the money entering the business, but profit is what actually stays in your pocket. This is a massive trap for beginners. Confusing revenue for profit is exactly how those hardworking folks go bankrupt. They mistake the money passing through their hands for money they actually own. Remember, revenue is what comes in, profit is what stays.
Which brings us to Section 3, surviving on cash flow.
Here's a harsh reality check. Profit does not equal cash. Profit is like your overall fitness level. But cash? Cash is the literal oxygen keeping you alive. Say you land a massive $50,000 catering gig. On paper, you are hugely profitable. But what if that corporate client has a net 90 payment term? They haven't paid you yet. You still need to buy beans today, and your staff absolutely expects to get paid on Friday. If your bank account is empty, it doesn't matter how profitable you are on paper. Without cash, you suffocate.
So we track cash flow through 3 distinct pipelines to see exactly where your oxygen comes from. First, operating cash flow. This is the money from your everyday hustle, selling lattes, paying baristas. It's the best kind of cash because it proves your core business actually works. Second, investing cash flow. This tracks the big stuff, like buying a new high-end espresso machine or expanding the shop. And third, financing cash flow. This pipeline handles the outside money, like taking out a loan to survive a slow season or bringing on a new investor. Tracking these means you never wake up gasping for air.
All right, Section 4, the balance sheet.
For this one, we're going to hit pause. We're freezing time to take a high-def snapshot of your company exactly as it stands today. Not last month, not next year, right now. It all hinges on this beautifully simple equation. Assets equal liabilities plus equity. It's your ultimate reality check. Let's walk back into that coffee shop to break this down. Everything you own in there is an asset. The cash in the register, the unroasted beans, the espresso machine itself. On the flip side, Everything you owe is a liability. That business loan for the espresso machine, unpaid payroll taxes, your supplier invoices. When you contrast your assets against your liabilities, whatever's left over is your equity. That's the slice of the business that actually, truly belongs to you.
Now you might be thinking, okay, with all this money flying around and all these reports, when do I actually write these numbers down? Like, how do we effectively track the timeline of all this?
That leads us to Section 5, timing, cash versus accrual.
Basically, you have two options. Option 1 is cash accounting. It's wonderfully simple. You only record the income when the cold, hard cash actually hits your bank account. It's great for tiny operations. Option 2 is accrual accounting. Here, you record the income the exact second the work is completed, even if the client hasn't handed over the cash yet. While cash accounting is easier, accrual accounting is a real game changer. It matches your expenses to the exact month you earned the revenue, giving you a crystal clear picture of your true performance. It's exactly why growing companies rely on it entirely.
As we wrap up this explainer, I really want you to remember something crucial. This isn't about pushing paperwork. It's not about surviving tax season, and it's definitely not about doing complicated math. It's about making smarter decisions, period. Every single successful entrepreneur eventually learns to speak this language.
Because when you finally understand your numbers, it's like someone flips on the lights. You stop crossing your fingers in the dark hoping for the best, and you start leading. You stop reacting out of fear, and you run your business with total, unshakable confidence. Your dashboard is clear, the fuel gauge is visible, and your path forward is fully illuminated.
So now that you know how to read your dashboard, I'm going to leave you with this. How are you going to use your numbers to fundamentally change your business today? What major decisions will you make differently tomorrow, now that you finally speak the language of business?